You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 14th of August, 2017. Let's jump right into these charts. We see that everything is up for the day. That includes the S&P 500. That is the NASDAQ 100 as represented by the ETF QQQ, or the cubes of the Qs. We call it the Qs. Also, 20-year bonds are up. And gold is up. Now let's jump right into what is happening. Of course, big down day yesterday for stocks. We see that our weekly chart is continuing to move down, and we have a weekly vertical crossover going down on that weekly chart. We do not see at this point a switch over from green to red on the derivative oscillator. Now, of course, the original weekly vertical crossover went down back on the 23rd of June. We had a parallel line running. The charts just over the course of 3 weeks couldn't figure out what to do. Now they've switched over to going down again solidly. We still have sort of a spinning top there, but I am, it's a hard call to make here. We never went out of the territory of our weekly vertical crossover going down that happened back on the 23rd, but this darn sure looks like another one, and we're going to play it that way on Monday. In other words, at 10:30, we're going to look and see how the markets are. If that 4-hour chart is headed down and the 2-day chart is headed down as it is right now, then we may very well jump in. We're going to sure check it out. I encourage you to do so, to do a down play potentially on Monday. Now, again, depends on how those markets shape up after they open at 10:30. Let's take a quick look at the 2-day chart. We see that 2-day chart also crossed over going down. And of course, the beautiful thing that we have on our software that we use at freestockcharts.com is it's so easy to draw trend lines. Remember, trend lines are bottom up, top down. So you always draw from the top on a down moving trend chart and from the bottom up on an up moving trend chart. So bottom up, top down. So we're drawing from the top on those trend lines going down. Now, let's look at the 4-hour chart just to see what happened over the course of the day. And as that 4-hour chart, we are traveling, so we don't have the typical fast internet we typically have. We can see that what we have happening is we don't have that pullback happening yet. We had a bit of a down morning on Friday, bit of an up afternoon. So we'll continue to watch and see, but we do have a confirmed down move on that 2-day chart. Now, the typical way that we trade is, of course, we wait for a pullback on the 4-hour chart or on the 2-hour chart. And the 2-hour chart's really flattened out. Once that pullback occurs, that means goes in the up direction for the down move. Since the weekly and the 2-day are in down moves, we would then wait for the 2 or the 4-hour chart to cross back over going down after a pullback, and we would jump in. You can do it either way, but we are going to look at the charts on Monday morning to see how the Qs look, and we're going to call this a weekly vertical crossover since we had 3 weeks of lamination. Again, not truly a crossover going up in the opposite direction. It never certified that, but we had 3 weeks of a laminated blue down line, so PPO. So we'll consider doing that on Monday, seeing how things work. Let's look at the Qs now on the weekly chart. We see that the Qs of the NASDAQ 100, it never got laminated as close as the S&P 500 did. It's continuing to move down. We also feel better because the derivative oscillator has been in negative territory the entire time, unlike the S&P 500 that's still in positive territory for the derivative oscillator. That does give us some concern, so we're going to be careful about jumping into a down move on the S&P. The Qs, however, we have it continuing to move down, actually moving down stronger now on the weekly chart. Let's look at that 2-day, and you can see that it did cross over, confirmed. We've closed out the candle now, so we have a 2-day vertical crossover going down. As we look at the 4-hour chart, we can see that it crossed over all the way back on the afternoon of the 9th, Wednesday, and we had a little bit of an up move, really a doji in the afternoon. So we'll continue to see how things go. Of course, we would like to see a crossover in the opposite direction on either the 4-hour or the 2-hour. A 2-hour may be close to doing that. We've seen basically the noon, the 2 p.m. and the 4 p.m. on the Qs. The 2-hour chart has been going up. So if we have that reverse, so again, just keep your eyes out for that. We'll see if those things shape up for us in the coming week. Okay, let's go to gold. Oh, and by the way, Q's up 0.75% for the day. S&P 500 up 0.14%. TLT up just barely 0.05%. What do we see going on there? Well, remember the Q's crossed over going up all the way back on the 7th of February. And again, been spinning basically flat and sideways for the last several weeks. This past week is an up week. Derivative oscillator still in the negative. We don't like that on the weekly chart. As we look into the 2-day chart, what do we see? We, of course, see that the 2-day chart has crossed over going up after the strong up candle closing on the 11th of August. So we do have a strong up move. We're above both the 2-day and the weekly trend line. And as we look at that 4-hour chart, what do we see? Well, that 4-hour chart crossed over going up back on Wednesday the 9th in the morning, and we've continued to have strong up moves. We'll continue to watch, see when the pullback occurs and when we might have a jumping in point. You can also follow that 2-hour chart. And again, it might give you a jumping in point sooner, but again, it's riskier with the 2-hour because it's a smaller chart. Smaller chart means more risk and less money to make, typically. Bigger chart, bigger money, big rewards. And remember, all things being equal, the market tends to move in the direction of the biggest chart. And our biggest chart, unless we're looking once a quarter at the quarterly, and if you haven't taken that quarterly training yet, we're going to offer that again soon to everybody that missed out on it. We will let you know when that is. But occasionally, that is once a quarter, every 3 months, we look at that quarterly chart. Those of you who've already taken that training, of course, you already received your free quarterly chart layout. Now, next, let's go to gold. What's going on there? Well, of course, on the weekly chart, we see that gold crossed over going up, confirmed this week. We've already redrawn our weekly vertical crossover line. Gold is confirmed going up on that weekly chart. And we look at our 2-day chart, we see that it really crossed over all the way back on the 24th of July. Gold's been going up for quite a while. And of course, let's see what's going on that 4-hour chart. 4-hour chart is beautiful. It crossed over going up at noon on Thursday the 10th. And again, has continued to move up. When you look at the highest high in the afternoon at 120.73, gold is now up all the way to a high of 120. That's hard to call there, hard to get. There we go. It's 122.83. So again, we're continuing to watch gold. Those of you who trade gold on just the 4-hour chart, do keep in mind that now that we have that weekly vertical crossover going up on gold, all things being equal, the market's going to tend to move in the direction, most strongly in the direction of the largest chart, which is, of course, the weekly now. Folks, that's where we are as we end the week on Friday, go into the new week, Monday the 14th of August, getting halfway through the month of August already. The beautiful fall-winter trading zone is coming soon. Remember, all market crashes occur in the month of October. So we'll continue to watch and see what this market is doing, what it will do. We will trend follow. Remember, we're not forecasters, we're trend followers. You have questions, problems, concerns? We love to hear from you. We'll be getting your questions in over the weekend and preparing to answer those on the program at the end of the show during our daily market reviews. I hope you've been following along with your weekly your weekly market summary, and that you have been filling that out as we have been going. Remember, we do the weekly market worksheet. We do that every week over the weekend, and then Tuesday, Wednesday, Thursday, Friday, we fill out, for those days, we fill out the daily market worksheet. That weekly market worksheet takes the place of the Monday daily market worksheet because you're getting ready for the entire week. You're digesting what happened in the last week. All of that stuff is available for free if you simply go to chartingwealth.com and subscribe to our daily market review. You get links to all those things, plus our How to Read a Stock Chart video and the free layout that we offer you and instructions on how to download that at freestockcharts.com. I get questions all the time. How can I use this on the other software that I'm using? Folks, we have a freebie for you. freestockcharts.com. If you really like it, you can subscribe to TC2000. But for the time being, why not just do it all for free? Practice, see if this is 10 minutes a day you want to spend with us and really get good at this. The only way it's going to happen is if you dedicate yourself to doing this 10 minutes a day. Fill out your daily market worksheet once a week, that weekly market worksheet. And every time you do a practice trade, guess what? You fill out the trade worksheet. That's where we are. We love you guys. Take care. Let us hear from you. You have questions, problems, concerns? Write us cw@chartingwealth.com. All the best. God bless to you and your family from the whole team here.